Margaret is a 69-year-old retired nurse from Memphis. She'd been on Medicare for 4 years and collecting Social Security for 3. She paid her $202.90 Part B premium every month without question. She paid her annual deductible. She paid her copays every time she saw a doctor, which at 69, with a replaced knee and a thyroid condition she was managing, was often. She built her retirement budget around those numbers the same way she'd built her working life around her income, carefully, without complaint. Last fall, she was sitting in her doctor's waiting room when the woman next to her mentioned she hadn't paid a Medicare premium in 2 years. Margaret figured the woman just had different coverage. She asked. The woman told her about something called the Medicare Savings Program and gave her a phone number. Margaret sat in the parking lot and did the math on her phone. $202.90 a month for 48 months. She'd paid $9,739 in premiums on a program that was supposed to cover all of it, if her income fell within a certain range. Her income fell within that range. It had fallen within that range since the day she enrolled. She made 3 phone calls that week. By the time her next Social Security statement arrived, her monthly income was $570 higher, permanently, for the rest of her retirement. Not from a lawsuit, not from some new government program. From 3 calls that took less than 2 hours combined. Calls she could have made the day she turned 65. Calls nobody ever told her to make. My name is Mason Parker. For over a decade, I've studied retirement benefits, senior tax programs, and the financial rules that affect seniors every single year. What happened to Margaret isn't some rare exception. It's a pattern playing out right now across millions of households. If you're serious about your retirement income and you want to know what the system isn't telling you, this channel was built for you. Subscribe right now and turn on the bell. The people subscribed here find out about rules like this before it costs them years of income. The ones who aren't tend to find out after. Hit subscribe, and let's get into all 3 calls. Here's what I want you to hold on to through this whole video. 2 extra things are coming on top of the 3 calls themselves. First, I'm going to walk you through a billing protection tied to one of these calls, something federal law entitles you to, that most seniors who qualify have never once used. Providers who ignore it can face federal penalties. Second, I'm going to show you exactly how a scam targeting call 1 is running right now in 2026, and the one sentence that shuts it down completely. Both are coming. Stay through all 3 calls, because call 3 is the one the SSA has the least financial reason in the world to ever bring up first. Call 1, the earnings record verification call. The first call goes to Social Security, and it's about a record sitting online right now with your name on it that most seniors have never once looked at. Here's why it matters. Social Security calculates your benefit from your 35 highest earning years. Every year on that record came from a payroll report your employer submitted. Before the year 2000, most of that processing was done by hand. Employers filed paper forms, SSA clerks typed in the data, numbers got transposed, entire years got skipped. Part-year employment at companies that closed before filing their final reports never even made it into the system. A joint IRS and SSA review found that roughly 3.3% of all Social Security wage entries contain errors. Applied across 70 million active beneficiaries, that's over 2 million people collecting less per month than they actually earned. Not because they did anything wrong, but because a payroll clerk entered the wrong number decades ago and nobody ever checked. What one missing year actually costs you. Each incorrect year on your earnings record cuts your monthly benefit by roughly $100 permanently. That's not a rounding error. That's $1,200 a year. Over a 20-year retirement, one missing year costs you $24,000. 2 missing years cost $48,000. 3 cost $72,000. And the record has been sitting there the whole time, available for anyone to check, waiting for you to look at it. The correction is free. All you need is a W-2, an old tax return, or a pay stub from the year in question. Documents that are easier to find right now than they'll be 5 years from now. Once employers have closed, records get archived and paper trails disappear. How to find the error before you call? Before you pick up the phone, spend 10 minutes doing this. Log into your My Social Security account at ssa.gov. If you don't have one, create it. It takes about 10 minutes, and it's the single most useful account you'll ever set up for your retirement. Once you're logged in, open your earnings statement. You'll see every year of your working life listed, with a dollar figure beside each one. Compare those figures against whatever records you have: old tax returns, W-2s, pay stubs, even a solid memory of what you earned and where. You're looking for 3 things: any year showing 0 when you know you were working, any year where the figure looks significantly lower than what you actually earned, and any year that's simply missing from the list entirely. Pay closest attention to your highest earning years. An error in a $60,000 year damages your calculation far more than an error in an $18,000 year. Also, watch the years you changed employers, since each transition was another chance for a payroll department to attach your wages to the wrong record. And if you're a woman who changed your name after marriage or divorce at any point in your career, look specifically at the years around the name change. A mismatch between the name your employer submitted and the name on your Social Security record can keep those earnings from ever attaching to your file. Decades of work sitting in the SSA system, credited to nobody. Once you've flagged any years that look wrong, make the call. The number is 1-800-77-21213. When an agent answers, say exactly this: I want to request my complete earnings history and verify my record for any discrepancies year by year. That's the phrase that opens the correct process. The correction form is SSA 7008, free at ssa.gov. It has to be mailed or hand-delivered to your local SSA office. It can't be filed online. Sign it in ink before mailing. An unsigned form is treated as if it was never filed, and the correction window just keeps running. Margaret's result from this call: 1 year missing entirely, 1994, 8 months at a printing company that closed the following year. Their final payroll submission was never processed. One correction added $87 to her monthly benefit permanently. She'll collect that extra $87 every single month for the rest of her life. The earnings correction scam, how it's running into 2026. Before we move to call 2, I need to tell you about something running specifically around earnings record corrections right now, targeting seniors who've watched videos exactly like this one. After a senior learns their earnings record might have an error, and that fixing it could raise their monthly benefit, they sometimes get a call or see an ad from a company calling itself a Social Security Benefit Recovery Specialist or a Federal Earnings Audit Service. The pitch is simple. They'll handle the whole correction process: the SSA 7008 filing, the documentation retrieval, the follow-up, for either a flat fee of several $100s or a cut of any monthly increase going forward, sometimes 20% or more of every larger check for years. Here's the sentence that exposes this every single time. Everything they're offering to do is completely free, and you can do it yourself, directly with the SSA. Downloading Form SSA 7008 is free. Retrieving your W-2 records through the SSA itself, going back to 1978, is free. Retrieving income transcripts through IRS Form 4506-T is free. Filing the correction is free. The entire process, start to finish, costs you nothing beyond the time it takes to make a call and mail a form. Anyone offering to handle this for a fee is just following the exact free steps I described and charging you for the privilege of watching them do it. End that call. The only number that handles earnings corrections is 1-800-772-1213. The only form is SSA 7008. Both are free. Report any fee-based offers to the SSA fraud hotline at 1-800-269-0271. If you're paying out of pocket for Medicare costs you assumed were fixed and permanent, or your Social Security check has never been checked against the earnings record that built it, those are 2 of 7 rules quietly cutting into senior income right now in 2026. The Senior Money Defense Playbook covers all 7 in one place, including the bank account rules, the provisional income formula that determines whether your Social Security is even legally taxable, and the IRMAA appeal coming up in Call 3, with the exact forms and phone numbers for each one. The link's in the description below. Call 2, the Medicare Savings Program, the $7.5 million gap. Call 2 doesn't go to Social Security. It goes to a completely separate agency most seniors have never called. And the gap between those 2 agencies is exactly why an estimated 7.5 million eligible seniors aren't enrolled in this program right now, and are paying a premium every month that the state was supposed to be covering for them. Here's the background that explains the gap. The Medicare Savings Program was created by Congress in 1988, specifically to help low-income seniors cover their Medicare costs. In the nearly 4 decades since, enrollment outreach was never funded at the federal level. The assumption was that state Medicaid offices would go find their own eligible applicants. Most states have never had the staffing or budget to actually do that. So the program just sits there, $2,500 to $6,000 a year per qualifying senior, while the people it was built to help keep paying their premiums every month with no idea they could apply. Medicare is run by the Centers for Medicare and Medicaid Services. The Medicare Savings Program is run by your state Medicaid office, 2 separate agencies, 2 separate databases. Medicare doesn't flag your account and alert your state office that you might qualify. Your bank profits when you keep money in an account. Your Medicare plan profits when you pay your premium. Neither one has any financial incentive to tell you about a program that eliminates what they collect from you. So the conversation never starts. Here's how you start it yourself. Call 1-800-6334-227. That's 1-800-MEDICARE. And ask them to connect you with your state's Medicare Savings Program office. When someone answers, say exactly this: I want to apply for the Medicare Savings Program and find out which tier I qualify for. The Medicare Savings Program has 3 tiers, each covering a different slice of your Medicare costs, each with its own income threshold. The 2026 income limits are higher than most people expect, which is exactly why so many seniors rule themselves out before they ever make the call. Tier 1 is QMB, Qualified Medicare Beneficiary. The 2026 income limit is $1,350 a month for a single person, $1,824 for a married couple. QMB is by far the most valuable of the 3. It covers your Part B premium completely, your Part A premium if you pay 1, your annual deductible, and every copay and coinsurance charge on every Medicare-covered service you receive. Nothing out of pocket. The state pays Medicare directly on your behalf every month. Annual savings run $2,500 to $6,000, depending on how much Medicare-covered care you use in a year. Tier 2 is SLMB, Specified Low-Income Medicare Beneficiary. The 2026 income limit is $1,616 a month single, $2,184 married. SLMB covers your Part B premium only. That's $202.90 a month eliminated, $2,434.80 back in your pocket every year. Tier 3 is QI, qualifying individual. The 2026 income limit is $1,816 a month single, $2,455 married. Q. I also covers your Part B premium completely, same $2,434.80 a year. The income threshold sits a bit higher than SLMB, so it catches seniors who earn slightly too much for SLMB but still need help. One detail about Q, why most people never hear. It's funded first come, first served each calendar year. Once the annual funding runs out, new applications get waitlisted. If your income puts you in the QI range, apply as early in the year as you can. Waiting until fall for a benefit that can run dry by summer costs you a full year of savings. The QMB billing protection most seniors never use. Here's a protection that comes bundled with QMB enrollment that most qualifying seniors have never once used, even though federal law guarantees it to them. Under federal law, any Medicare provider who bills a QMB recipient directly for a Medicare-covered service is breaking the law. Not a gray area, a documented federal violation. If a doctor's office, hospital, lab, or any Medicare provider sends you a bill for a copay, deductible, or any cost-sharing amount after you're enrolled in QMB, you are not legally required to pay it. Instead, tell the provider you're enrolled in QMB and ask them to check your coverage status in the Medicare system. If they keep billing you anyway, report it to Medicare at 1-800-633-4227 and to your state Medicaid office. Providers who knowingly bill QMB recipients for Medicare cost sharing can face federal penalties. Margaret had been paying roughly $150 a month in copays before she enrolled. After QMB, those bills stopped. Combined with the eliminated Part B premium, her total monthly savings from Call 2 alone came to $352.90 permanently. The extra help bonus nobody mentions. Here's something almost no coverage of the Medicare Savings Program explains clearly. And it's one of the most valuable parts of enrolling. When you enroll in any tier of the Medicare Savings Program, you're automatically enrolled in Extra Help, the federal program that lowers your Medicare Part D prescription drug costs. No separate application needed. It happens automatically as part of your MSP status. With Extra Help active in 2026, your maximum copay is $5.10 for generics and $12.65 for brand name drugs. No Part D premium, no annual deductible. For seniors managing multiple medications, the annual savings from Extra Help alone can reach several $1,000s, on top of what MSP enrollment already saves you. The asset question that stops most seniors before they call, the most common reason seniors give for not applying to the Medicare Savings Program is assuming their savings or assets disqualify them, without ever checking the actual numbers. The 2026 asset limits are $9,950 for a single person and $14,910 for a married couple. Your primary home isn't counted. One vehicle isn't counted. Only liquid assets count: bank accounts, stocks, and bonds. And 12 states have eliminated the asset tests for this program entirely, including Connecticut, Delaware, Louisiana, Maine, Mississippi, and several others. If you live in one of those states, only your income matters. Also, starting April 1st, 2026, dependent relatives you financially support count toward your household size when eligibility is calculated. That raises your income threshold, making it easier to qualify if you're supporting an adult child, a grandchild, or another dependent living with you. The rule here is simple. Don't assume you don't qualify. The application takes about 15 minutes. The state decides eligibility. The only cost of applying and finding out you don't qualify is 15 minutes. The cost of not applying when you do qualify is potentially thousands of dollars a year for the rest of your retirement. Call 3. The IRMAA appeal. The call SSA will never suggest. Call 3 goes back to Social Security, same number. And this is the one the SSA has the least financial incentive to ever bring up first. Because every month you don't make this call is another month the surcharge keeps running, and another month the premium keeps collecting on income you may no longer even earn. Let me explain what IRMAA is, then show you exactly who it's hitting right now in 2026 who shouldn't be paying it at all. IRMAA stands for Income-Related Monthly Adjustment Amount, a surcharge added to your Medicare Part B premium when your income from 2 years ago crossed certain thresholds. Key phrase, 2 years ago. Your 2026 surcharge is based on your 2024 tax return. Medicare looks at that return, runs the calculation, and adds the surcharge to your monthly premium automatically. No letter explaining why. No suggestion that you might be able to appeal it. The number just shows up on your statement, and the premium gets deducted from your Social Security check every month. If your life has changed since 2024, the surcharge hasn't changed with it. It's still running on the old number, and for a specific group of seniors, that old number no longer reflects reality at all. Who the surcharge is still hitting in 2026. Here are the situations that catch seniors off guard and that qualify for an immediate appeal. You retired at the end of 2023 or sometime in 2024. Your final working year included a full salary or a partial year of income higher than your retirement income will ever show again. Medicare looked at that return and set your 2026 surcharge based on a salary you no longer receive. You're now living on Social Security and savings, still paying a surcharge calculated as if you were working full-time. A spouse passed away in 2023 or 2024. Your filing status went from married to single. Your household income dropped significantly because you lost a second income source or a pension that ended with your spouse's death. The surcharge calculation never adjusted. It kept running on the joint income from a return that no longer reflects your household. You sold a property or a business in 2023 or 2024. A one-time transaction, not something recurring, pushed your tax return into a much higher bracket for that single year. Medicare picked up that number and has been charging you for it every month since, as if the sale were happening over and over year after year. Your pension was reduced or eliminated. You cut back your work hours significantly. Any of these can shift your income meaningfully since the return Medicare is currently using. And the surcharge hasn't caught up. The surcharge tiers and what they're actually costing you. Here are the exact 2026 IRMAA surcharge amounts. So you know what this call is worth. For a single filer, income above $106,000 adds $81.10 a month to your Part B premium, $973.20 a year on top of the standard $202.90 monthly premium. Income above $133,000 adds $204.40 a month, $2,452.80 a year. Income above $167,000 adds $324.70 a month. Income above $200,000 adds $445 a month. And the top tier, income above $500,000, adds $576.90 a month. These are all on top of the standard $202.90 Part B premium. A senior at the second IRMAA tier is paying $407.30 a month for Part B alone, $4,887.60 over a year. If their income has dropped since that 2024 return, the gap between what they're paying and what they should be paying just keeps getting collected, month after month, with no automatic correction in place. Here's what makes this especially sharp in 2026. The Part B premium jumped from $185 in 2025 to $202.90 this year, a 9.6% increase in a single year. Social Security's COLA for 2026 was 2.8%. Before a single retiree spent a dollar on groceries, utilities, or medication, nearly a third of their entire cost of living raise was already gone to the Medicare premium increase. Seniors paying an IRMAA surcharge on top of that get hit twice. Once by the premium increase, once by a surcharge tied to income that may not even exist anymore. The 5 qualifying events that allow the appeal. The SSA 44 form exists specifically to fix this. It's called the Medicare Income-Related Monthly Adjustment Amount Life-Changing Event Form, and it lets you document your current income and request that your surcharge be recalculated based on what you earn now, not what showed up on your 2024 return. To request it, call 1-800-0077-21213. When an agent answers, say exactly this: I want to request the SSA 44 form to appeal my IRMA, a surcharge based on a qualifying change in my income. That opens the correct process immediately. The 5 qualifying events recognized on the SSA 44 are retirement or work stoppage, death of a spouse, divorce, reduction in work hours, and loss of pension income or loss of income-producing property. A one-time property or business sale that inflated your 2024 return qualifies under loss of income-producing property. Since the income isn't recurring, for retirement, you'll need your final pay stub from your last employer or a letter from them confirming your separation date and final salary. For death of a spouse, bring a copy of the death certificate along with documentation of your changed household income. For a property sale, bring documentation showing it was a one-time event, plus your current ongoing income. Once you submit the SSA 44 with supporting documentation, your surcharge gets recalculated based on your current income. If that income falls below the first IRMAA threshold, the surcharge is eliminated entirely. The recalculation typically takes effect within 60 to 90 days, and every month you delay is a month of that surcharge you can't get back. Margaret had been paying a $298 monthly IRMA, a surcharge in 2026, based on income from a property her late husband had sold 2 years before he passed. That one-time sale had inflated their final joint tax return, and her current income no longer resembled what Medicare was using to set her premium. She filed the SSA 44 with a copy of the death certificate and documentation of her current income. The surcharge was eliminated entirely, $3,576 a year back in her pocket, every year going forward. A 67-year-old retired teacher in Phoenix named Helen had sold an investment property in 2022 for a significant gain. That year's return showed income far above anything she earned from teaching or would ever earn in retirement. Her 2024 Medicare premium carried a $487 monthly surcharge. She filed the SSA 44 with documentation of her current retirement income. The surcharge was eliminated, $5,844 a year back. One form, filed through one call to one number she just had to know to dial, inside a system that was never designed to help her find it. Let me bring all of this together with the one idea running through all 3 calls. 3 separate government systems, Medicare, your state Medicaid office, and the Social Security Administration, and none of them automatically cross-reference against each other. None of them have a built-in step that flags when a number affecting your payment is wrong and prompts you to call and fix it, because fixing it costs the system money. The system was never designed to cost itself money on your behalf. The Part B premium went from $185 in 2025 to $202.90 in 2026, a 9.6% jump in 1 year. Social Security's COLA was 2.8%. Before a single retiree spent $1 on groceries or medication, nearly a third of their entire annual raise was already gone. The 7.5 million seniors who qualify for the Medicare savings program paid that full increase on a bill the state was supposed to be covering. The seniors paying an IRMAA surcharge on income they no longer earn paid it twice. The seniors with errors in their earnings records collected a reduced benefit for another year because nobody ever checked the record on their behalf. 3 phone calls change all 3 of those outcomes. None of them need a lawyer. None of them need paperwork beyond what most seniors already have at home. All 3 are free. Your complete action list, call 1 to Social Security at 1-800-77-21213. Before you call, log into ssa.gov and open your earnings history. Go through it year by year. Any year showing 0 or significantly lower than what you actually earned is your starting point. When you call, say, I want to request my complete earnings history and verify my record for any discrepancies year by year. The correction form is SSA 7008, free at ssa.gov. Mail it to your local SSA office, signed in ink. If anyone offers to handle this for a fee, that's the scam. The whole process is free. Call 2 to 1-8006-334-227. That's 1-800-MEDICARE. Ask to be connected with your state's Medicare Savings Program office. Say, I want to apply for the Medicare Savings Program and find out which tier I qualify for. Don't rule yourself out before you call. Your home isn't counted, your car isn't counted, and 12 states have no asset test at all. The 2026 income limits are $1,350 single for QMB, $1,616 single for SLMB, and $1,816 single for QI. If you're near the QI threshold, apply early in the year. QI funding is first come, first served, and it runs out. Call 3 back to Social Security at 1-800-077-21213. If your income has dropped since 2024 due to retirement, the death of a spouse, divorce, reduced work hours, or lost pension income, say, I want to request the SSA 44 to appeal my IRMAA surcharge based on a qualifying change in my income. Bring documentation of your qualifying event. Every month you delay is a month of that surcharge you can't get back. Now I want to speak directly to the seniors watching who recognize their own situation somewhere in these 3 calls. A Medicare premium you've been paying for years without ever questioning whether it was really yours to pay. An earnings record you've never once looked at. A surcharge running on income from a tax return that no longer reflects your life. If that sounds like you, the next step isn't another video. It's acting on what you now know before another month goes by and another payment goes out that didn't need to. But these 3 calls aren't the complete picture of what's quietly cutting into senior income in 2026. There are 4 more rules most seniors never find out about until after the damage is done. The bank account that legally hands your savings to a creditor the moment your child's name goes on it. The provisional income formula that determines whether the IRS is taxing Social Security it was never supposed to tax. The W-4V withholding rate that sends your own money to the IRS 12 months early. The joint account that bypasses your will entirely and hands your money to whoever happens to be listed on it. I put all 7 together in the Senior Money Defense Playbook, the 3 from this video and the 4 others. 60 pages, plain English, every government form named, every phone number listed, every action step spelled out. So you know exactly what to do and in what order. If even one chapter puts 1 month of a missed correction back in your account, the guide has paid for itself many times over. The link is in the description below this video and in the channel bio. It's called the Senior Money Defense Playbook. Get it today. 2 of the deadlines inside it close before the end of this calendar year. Subscribe and turn on the notification bell. Send this video to one retiree you know who's never questioned why their Medicare premium is the number it is. That one share might put hundreds of dollars back in their account every month. From 3 calls, the system had every reason in the world to never suggest. I'll see you in the next one.